pants. We're about to do the next video. It's about accountants and AI. Do you want to tell me something? Oh, okay. Thank you. That's very good input. All right, next episode. So if you haven't heard, there's a $1 billion startup that just built AI agents to replace accountants. They raised $100 million. They've got Google Ventures, Accel, some of the biggest names in Silicon Valley, and their whole pitch is AI agents that do your books, your taxes, your audit, end to end. Let me show you how it works. So I'll be honest, I just started this business, and there's something that nobody tells you when you first start it. You think the hard part is going to be building the product, getting customers, making money. And yeah, that is hard. But then there's this whole other thing that shows up, the financial thing. And I'm not going to sugarcoat it. I've tried to start businesses in the past, and they weren't successful. I didn't put enough work in. But one of the biggest things I've learned is that unless you know somebody who runs a successful business and is willing to sit down and walk you through everything, you're kind of on your own. You can go to your corporation commission's websites, get some brochures, figure out how to file this and file that. But there's so much more that goes into it. Not everybody's good at financials. Not everyone wants to track all that stuff. And it's absolutely another job. There are 30 million small businesses in America, and most of them handle the financial side in one of three ways. Option 1, you ignore it until April and then you pray. Option 2, hire a bookkeeper. That can be a couple $100 a month. Or option 3, you can spend your Sunday night in QuickBooks slowly losing your will to live. And I think most people are the ignore it till April kind of people. I know I was. But what I've learned is that daily practices, or at minimum, weekly practices, have the largest impact on the future of whatever you're doing. It's the same for exercise. It's the same for diet. It's the same for anything that requires discipline. It's not fun most of the time. It's not something you necessarily want to do. But just like brushing your teeth, it's just something you have to do. And honestly, that's just how you have to be with your business. There's a lot of unsexy work that's just required to make it successful. And there's no getting away from it. Let me give you the 30-second version of what's happening in accounting AI over the last 12 months, because it's kind of wild. AI adoption in accounting firms went from 9% to 41% in 1 year. That's not a trend, that's a land rush. A company called Basis just raised $100 million at a $1.5 billion valuation. They're an AI-first accounting platform, unicorn status. They say that 30% of the top 25 accounting firms are using their agents, and they just demonstrated their first AI agent to complete an entire 1065 partnership tax return start to finish without a human touching it. Meanwhile, QuickBooks launched Intuit Assist, an AI layer that auto-categorizes your transactions and lets you ask questions about your finances in plain English. Xero launched Jax, their own AI assistant. Vic.ai is processing 85% of invoices without any human input at 99% accuracy. But here's the other side. Bench, the biggest bookkeeping service in North America, 35,000 clients, 600 employees, collapsed overnight in December 2024, just gone. And BotKeeper, which raised $100 million, shut down in 2026. And that's kind of the entire AI fear in a nutshell. The whole goal is just not to get left behind, because almost every industry is going to be affected. And honestly, if you're not going to adapt, if you're not going to move with the times, it doesn't matter how large you are, you're going to get left behind. Now, here's why accounting is the perfect use case for AI agents. And I mean that specifically, not just generically. Everything is documented. There are very specific and very large consequences if you don't follow the rules. There's massive amounts of data to learn from. Taxes that have been prepared using proper bookkeeping practice that go back decades. There's very little room for nuance. GAAP is a rulebook. The IRS publishes categories. Reconciliation is arithmetic. This is fundamentally different from asking AI to write a creative essay or design a logo. In accounting, the rules exist, and the right answer is usually pretty clear. That's why the accuracy numbers are so high. AI hits 96 to 99% accuracy on reconciliations, 92 to 99% on invoice data extraction. These aren't theoretical. These are published benchmarks from companies processing millions of transactions. And the mental model is simple. I like to think of it like Waymo. For those of you who don't know, Waymo is a self-driving car. It's a Jaguar shell. I hope Waymo sponsors me. But it has a bunch of cameras with no driver, no one in the front seat. I live in Phoenix, and honestly, I love them. A lot of people are afraid of these self-driving cars. But think about it. If I'm getting an Uber after a concert at 10 p.m., I don't know if that driver has been driving for 19 hours. I don't know if they've had 7 energy drinks and worked a double the night before. I don't know if they're going through a divorce and they've been emotional all day. I don't know if they've been drinking. I don't know if they're texting while driving. With a Waymo, it's a driver that is never upset, always pays attention, is never texting, and is never tired. It just doesn't sleep. That's your AI accounting agent, a junior accountant who never gets tired, who never transposes a digit, and works at 3 in the morning without complaining. They might not know how to handle a roundabout sometimes, but they're great. Now, a little side note, Waymos are awesome, but they are pretty funky. If you want to look into them, I think they're great, but I've had a couple stories where they don't know how to do roundabouts, and I think that's hilarious. Now, Agent 1 is the workhorse. Its job is simple but tedious when done by hand. Take every transaction that hits your bank account and put it in the right bucket. Let me walk you through how this works. The agent pulls in a bank feed, could be a CSV export, an OFX file, or a direct API connection. Then it categorizes every line item. Software subscriptions go to software and SaaS. The Adobe charge, software and SaaS. The domain renewal, website expenses. The lunch meeting, meals and entertainment, 50% deductible. It uses pattern matching first, vendor names, recurring amounts, transaction descriptions. Then it layers on machine learning that gets smarter over time. Every correction you make, it learns from. And look, I've been there. I try to review my credit card statements every month, and I've had it a couple times where I'm staring at some $12 charge or a $17 charge going, what is this? And then I go back and look, and it's been charging me for the last 8 months. This is real, by the way. Some free trial I signed up for and completely forgot about. It's annoying. That's exactly what Agent 1 catches. Those yellow flags, anomalies. A charge from a vendor you've never used before, an amount that's different from a usual pattern, a possible duplicate. The agent doesn't just categorize, it says, hey, look at this. And actually, this is a big deal in my other project that I'll announce soon. Basically, anomaly detection is huge there, and it's one of those things that's just kind of missing right now. Anytime you have humans entering numbers, there's a chance for error. Even if they take their time, someone can fat finger it, and that's a mistake. And that mistake can cost a lot of money. The published benchmark from bookkeeper before they shut down was 80% or higher on auto categories at 98% accuracy. In my testing, once the agent has a month of corrected data to learn from, it can be even better. Agent 1 finishes, and it hands it off to Agent 2. Now, Agent 2 is the one that catches the mistakes. And trust me, there might be mistakes. Reconciliation means, does what my bank says match what my books say? Every transaction on my bank statement should have a corresponding entry in my accounting records. If there's a mismatch, something went wrong. The agent takes the categorized transactions from Agent 1 and lines them up against the bank statement. It matches by amount, date, and description. When everything lines up, green. When something doesn't, red. And before any of this, I can be honest, I was absolutely a check the bank balance and hope for the best kind of person. I love my parents to death. They're wonderful people. But we didn't come from a lot of money. They didn't run their own businesses. And I really wasn't taught how to balance a budget. I wasn't taught that in school either. And now I'm trying to automate it so I don't have to worry about it as much. But I've also tried to take a lot of those lessons to heart. Here's the thing about reconciliation that makes AI so much better than humans at it. It's checking hundreds of line items one by one, looking for mismatches. If you've ever had to audit a ton of data on a spreadsheet, it's not fun. And even if you're really good at it, there's only a certain speed you can go. A human doing this at 2 p.m. on a Friday, they're thinking of grabbing drinks after, they need more coffee, they're going to miss things. The agent checks every single line, every time, with the same attention on line 300 as line 1. 96 to 99% accuracy. The remaining 1 to 4%, edge cases that get flagged for human review. That's the right model to have. Agent 2 generates a reconciliation report, matched items, unmatched items, discrepancies, and hands it off to Agent 3. Agent 3 takes clean, reconciled data and turns it into the documents you actually need. The big three: profit and loss statements, balance sheet, and cash flow statements. If you're a small business or a solo LLC like me, the P&L is one you look at most. It tells you, am I making money? And I'll be straight with you. Since I just started the business, my P&L right now is honestly just expenses. There's no profit currently, but that's the whole point of tracking it, right? I want to see where things flip. I want to see the trajectory. But here's where it gets more useful than just a static report. The agent adds trends analysis, month-over-month comparison. Your software costs went up 12% this month. Is that a new subscription you forgot about, or did something renew at a higher rate? Expense ratios, cash runway projection. At this burn rate, how many months can you operate? For me, my overhead is actually pretty low. It's mostly subscriptions. It's mostly online stuff. I already had the camera equipment, the beast of a computer I use for video editing, so realistically, I can run this business for a while. But I'm in the minority there. Most businesses don't have that luxury. And one of the things I've really enjoyed about AI is it can find me tools that help me in business that I wouldn't have known about. Marketing tools, image generation, different websites. A lot of stuff is out there, and AI services it for you. This kind of reporting used to mean 40 minutes of staring at QuickBooks and manually comparing numbers in your head. The agent can do it in seconds. And it does it consistently every time with the same format. Same analysis every single month. No, I'll just get to it later. No, I'll just check the bank balance and call it good. A Stanford and MIT study found that accountants using AI close their books 7.5 days sooner than those who don't. 7.5 days. That's not a marginal improvement. That's a difference reality. The next step is that Agent 3 hands those reports and the clean data to Agent 4. Now, Agent 4 is the one that can save you money, or more accurately, keeps you from leaving money on the table. Its job is to take all the categorized, reconciled expenses and organize them by IRS deduction category. For an LLC filing Schedule C, that means office expenses, software, professional services, advertising, meals, home office, vehicle, all the categories that the IRS cares about. Now, this is going to be my first year dealing with quarterly estimated taxes, and honestly, I'm excited about it, because then it won't be such a burden in April every year. The agent takes your year-to-date income, applies a self-employment tax, plus your effective income rate, and tells you exactly what you should be paying each quarter. No guessing, and better yet, no penalties. But here's the thing that I think is one of the most important parts. Taxes aren't easy, but they're very straightforward. A good CPA is going to make sure you have all of your ducks in a row, have all of your forms. But providing all your forms is one thing. Providing proper documentation on all of the different expenses, that's where most people get stuck. Just because you qualify for deduction, you have to document it, and God forbid you get audited. The IRS is going to say, cool, you're looking for this deduction. That's great. We're happy to give it to you. Provide us all the documentation you've been keeping throughout the year for that. And most people aren't doing that. So if you can have that part automated, maybe you just punch in your monthly expenditures and your tax agent lets you know what needs documentation while it's still fresh. That's huge. You punch in the documentation and then you're set. You don't have to think about it after that. Now, I already have a tax agent in my system. It runs on a local LLM because I don't want my financial data leaving my machine. And that's really just one of the biggest gaps right now. Not just for taxes, but for any project where you're trying to use AI with real business data. You can't just plug your financials into ChatGPT or Claude. You have to be very careful with PII and personal information. And that's the whole point of running a local LLM. I can dump my credit card statements, my business statements, my Amazon order history, and it's all safe and secure locally. Nothing leaves my machine. Then it can help prepare my tax return, research the current tax codes, and find the best possible outcome while being 100% legal. Why would someone not want to do that? Personally, I think local LLMs are going to be really important soon. I'm really excited to learn more about it, and I actually have a few opportunities to help some local businesses with that. So I'll share what I find. Now, if you've been watching these videos, this is where we recap everything. So let me run the whole thing back so you can see the full picture. Bank feed comes in. Agent 1 categorizes every transaction, 80% or more automatically. The rest is flagged for a quick human review. Takes about a minute. Agent 2 reconciles everything against bank and credit card statements, catches mismatches, and generates a clean report. Another minute. Agent 3 produces the P&L, balance sheet, cash flow with trend analysis and runway projections. A few seconds. Agent 4 then organizes deductions, calculates quarterly estimates, flags audit risk. Another minute or two. Total time is under 5 minutes for a monthly close. Under 5 minutes. Okay, again, if you've been watching these videos, this is the honest part. Bench had 35,000 clients and 600 employees. They collapsed in a weekend. BotKeeper raised $100 million and still shut down. Two cautionary tales in the same industry, 12 months apart. And the lesson is the same concept I keep coming back to. The important thing to know about AI right now is, yes, what it can do, but more importantly, understanding what it can't do. And if you skip that step, it can be a disaster. Here's what AI does not do well in accounting right now. Complex entity structuring, multi-state tax strategy, industry-specific accounting rules with weird exceptions, audit representation. You need a CPA for that, period. And lastly, any transaction that is genuinely ambiguous, the kind where two reasonable accountants might categorize it differently. I have a CPA, and I think that's important. Tax applications for AI are pretty straightforward, but there's still some question of liability. I want someone I trust, who knows what they're doing, who's been in the business for a long time, just to be able to look at everything because they're going to get a feeling instantly if something's wrong. Maybe in 10 years we won't need that. Maybe AI will be good enough. But right now, I love having a human review the things that my AI can produce. The right model isn't fire your accountant. It's your accountant now has a team of agents that handle the volume so they can actually focus on the judgment calls that actually require expertise. 80% of the work, automated. The 20% that requires a human brain, that's where your accountant earns their fee. If someone just started a business this year and they're staring at a mess of transactions they haven't categorized, here's step 1. And I'm not a CPA, so please take this for what it is. But the most important thing you can do is contact a CPA. Pay for the lunch, hire them, whatever you need to do. There are some great CPA YouTube channels out there that I've started watching. Get the information on best practices now, because if you put it off, it's going to be 12 times worse in a year. Believe me. And then you build the pipeline. The tools exist, the accuracy is there. The question is just whether you're going to start now or keep kicking it down the road. Tell me in the comments, what part of your bookkeeping takes the most time? Is it categorization, reconciliation, the quarterly tax scramble? I want to know what's actually painful for you because it might actually help me. And subscribe if you haven't, because next week we're covering the role that's getting replaced faster than any other right now, the sales development rep. Some companies are literally firing their entire SDR teams and replacing them with AI agents. Full outbound pipelines, lead research, personalized emails, follow-up sequences, meeting booking, 0 humans in the loop. I'll show you exactly how that pipeline works and what it means for the millions of people in sales. That's episode 5, and I'll see you there.